Welcoming the weak rand, it helped Sasol to ride out the lower oil price storm. For now, Sasol reporting a 6% rise in headline earnings, which is the main measure of profit in South Africa. Sasol's results released today were much anticipated after the oil price started plunging in July last year. Now that affects Sasol's revenue. Of course, it's one of our biggest companies, and it makes synthetic fuel that is sold in line with the global price of oil. However, the company says the weaker rand and higher chemical sales more than offset the decline in oil. It's going ahead with projects in Mozambique and the United States, although a gas-to-liquid plant that was to follow in Louisiana at an estimated cost of around $20 billion has now been shelved. Now, for a long time, Sasol's dividends have been rising with every result that we see, but today they were cut from 8 rand per share last year to 7 rand per share. That affects thousands of pensioners invested in Sasol through their retirement investments. Well, earlier I spoke to Sasol CEO David Constable. I started by asking him what today's results would have looked like if the oil price hadn't plunged last year.
Years in the company's history, FY14. The first quarter of FY15 was starting on a high note, even into second quarter. However, the OPEC decision in November to chase market share at any price, you couple that with U.S. shale oil production booming and slow global growth. Of course, that's really impacted the oil price and impacted our underlying performance. Certainly the numbers are very good right now. EPS up 53% to 32 rand 4 cents, and HEPS headline earnings up 6% to 32 rand. So obviously that's a number you should look at year on year, but because we did have some once-off positive impacts from remeasurements. So it would have been a phenomenal first half if the oil price had stayed at $90 or $100.
Are you frustrated with some Saudi ministers right now?
No. I mean, it's that's strategy. I think Saudi Arabia is somewhat frustrated with their some of their OPEC counterparts who do not pull back on production. They feel like it's more often than not Saudi Arabia having to pull back while some of the other members continue to produce it at their higher levels. So I think it was quite a bit of a strategy employed here, obviously to see where the marginal cost was for U.S. shale oil, and that's working, as we see rig counts coming back and marginal producers coming off the market. There's also political tensions in the Middle East that this certainly plays into Saudi Arabia's hands, and so there's various things going on right now with what they're trying to achieve, and for the most part they're doing it, but they also can't do it for too long at these lower prices. They won't want to see it stay low for too long.
So many people seem to have been caught completely unawares. Economists, analysts, business people. Were you as an executive team, and is that a problem? You do scenario planning. What sort of oil price range were you looking at the time when it started plunging?
Yeah, we obviously stress test at very low oil prices when we make investments in our capital projects, including our big projects in the U.S., which obviously require you to look at not only the oil price, but natural gas prices and a variety of sensitivities that we look at. So it was, I can't tell you that we picked the day it was going to happen, but we knew there was going to be a macroeconomic shift. We knew that 3 years ago. And I think that's the good news about the management team at Sasol. We took action to ensure that the company was going to be healthy no matter what the rand or the oil price did, because we had in the past been running off a fairly high oil price and a fairly weak rand, and everything was fine. So the case for change to go through the business performance enhancement program, where we're pulling out now 4.3 billion rand annually, took place 2.5 years ago because we were concerned about shifts in macroeconomics. So like I said, we couldn't pick the time or the day that it happened, but we knew it was coming. And we wanted to be wanted the company to be in a good, healthy state to be able to take it on. And we have. So on top of the enhancement program, we came in December with a response plan to the low oil price, and we'll be conserving 30 to 50 billion rand over the next 30 months. That's a lot of cash, obviously, to protect, but we're able to do that because of what we did previously. We've streamlined the company. It's simplified. We've gone from 16 businesses to 6 businesses, 40 functions to 19 functions, and reduced the management layers dramatically and increased the span of control. So it's a new way of working. It's sustainable because we've changed the structure so dramatically, taken out thousands of people in the management ranks. So it was a huge change that we did for this eventuality again. We didn't have the crystal ball right on the day.
You now say you're planning for an oil price that is lower for longer. But what if that changes? What if it goes up dramatically? Are you prepared for that?
The cash conservation work streams have flexibility in them and that's why we say 30 to 50 billion. We'll take 50 billion out if it's lower for longer, and we'll taper back to closer to the 30, probably more than 30 billion rand in the next 30 months. But we'll taper back closer to 30 if we start to see oil prices rise at the end of this year or into next year. So that's why we're giving quite a big range. We're comfortable with getting all the way to the top end. We started in December, like I said, and the teams are out actively cutting back and working on cash cost savings and capital structuring. As you know, we changed the dividend policy, gross margin and working capital improvement, and then capital portfolio, reductions of capital.
Let's talk about the dividend that you mentioned, because there's huge public interest here. Pension funds heavily invested in Sasol. Also, the BEE shares in Zalo only maturing in 2018, but those are in your hands. In my opinion, Sasol has been quite quiet since the oil price started plunging. Are you willing to be accountable to the South African public and say that the decisions we're making are the best right now?
Certainly the dividend policy decision is the correct one. If you talk to any investor, shareholder, analyst, generally across the board, moving to a dividend policy based on a cover range of headline earnings is correct for a commodity business like ours, and gives us flexibility so that when earnings are good, we can really reward shareholders. A progressive dividend, which we moved away from, in a very volatile market, which is coming, I believe. The oil price is going to be volatile for some time to come. Having a progressive dividend in a volatile commodity business is not appropriate, and really handcuffs the company. And so we're very pleased that we've moved to this cover range.
Let's talk about Louisiana. There was this huge $20 billion project mooted. It's now on hold, that gas to liquid plant. When it was to go ahead, people were talking about Sasol immigrating from South Africa. Is that fair? Because Sasol was started with government funds, because a lot of motorists have propped Sasol up, should we say Sasol should be loyal to South Africa, or should we want you to be the best global company you can be?
Well, obviously the company was privatized, so all the funding was properly accounted for when we privatized. So that's well behind us. I think you need to look at Sasol as a global company, and as a South African or as a shareholder, you should be pleased that we are diversified, not only by industry but also by geography. We're, as a company, just look at the current situation. In energy, we are obviously in tough times right now with that type of an oil price, but the chemicals businesses, performance chemicals and base chemicals, are printing money. I mean, just sales volumes are all-time highs, the margins are up, and hopefully people understand that with 44% of the profits coming through chemicals and even and turnover at 56%. We're also a chemicals company that needs to grow globally, and we're like in the top 40 chemical companies in the world. That's something that South Africa should be proud of, and not just box us into to stay in South Africa. And that'd be very difficult for us to grow and be successful, and also take the cycles of the oil, gas, and petrochemical industry.
When will that decision now be made?
Obviously, the cracker's up. We've got the FID, and it's coming along nicely. The US GTL we've delayed for obvious macroeconomic reasons, but also cash protection reasons through the response plan. So it's some years away. I'll say that before we think we could get back to an FID on US GTL. And you also need to think about right now we're going to step back and look at the new oil price scenarios and the panel views of experts, internally and externally, and revisit our strategy near to medium term for the rest of the decade and longer term. And we'll probably see other monetization technologies step up a little more strongly than previously. So gas to power is big for us now, natural gas to power generation. LNG, I think, will feature in the future, and more chemicals, gas to chemicals, through the ethane derivative value adds, which, of course, we're just getting started in, like Charles, right now. So GTL is going to be one of many levers we'll pull at the appropriate time.
The question is, when it comes to South Africa, are you just treading water here, or are there future plans? Future plans that will grow jobs. And of course, this comes in the context of you freezing vacancies, letting 1,500 people go last year. What about future jobs? How secure are our Sasol staff right now?
We are firmly planted here, and I've been saying this for 4 years, almost 4 years now, so I'll continue to say it. South Africa, Southern Africa is one of our key strategies, regional strategies, well into the future, at least to the middle of the century. We are spending billions of rand making sure our Southern Africa integrated value chain is successful through 2050. So that should give you some indication that we're not going anywhere. We're actively looking for more natural gas and oil in Mozambique. We've just submitted our field development plan for two oil reservoirs and 2 natural gas reservoirs. A lot of that will benefit South Africa as we find more natural gas. That allows us to expand and keep our South African businesses running successfully, both on the liquid fuel side and on the chemical side. Looking out, we also want to participate in supporting the electricity challenge. We think an energy, we are a player in the energy markets, and we think we can support the government in natural gas-fired power generation, which is much quicker than some of the other alternatives that the government's looking at. So bringing LNG into the country is something that we'd like to, and that we are discussing with government, to not only potentially convert the diesel peakers in Saldanha Bay, but also to look at new major gigawatt expansions in gas to power in the country.
Just explain this for lay people. So you want to help Eskom, you can change the electrical landscape, if you like.
Well, there's many fronts we're playing on. We've got extra capacity of power in our facilities, so we want to sign power purchase agreements for up to 400 megawatts right away, just to take some of the heat off. They're expiring, some have expired, but we want to do more, obviously, and I think we can do more along the lines of big multi-thousand megawatt gas to power generation, most likely on the coast, because you'll need LNG to do that. Karoo gas is quite a ways away. Mozambique gas from the Rovuma Basin is many years away before that's up and running. So to do it quickly, you'd want to import LNG from the Middle East or from the U.S. Gulf Coast and look at some power generation quickly. Gas-fired power generation could be built in a few years.
Sasol CEO David Constable. Well, Sasol's share price reached a high, if you remember, of around 650 Rand in June last year. It's dropped about 40% since then, tracking that oil price lower after today's results. Investors do seem pleased, climbing by 1%. Now let's look at other market news. Here are your main financial indicators. After the break, S&P, the credit rating agency,